Hello friends, and as promised in the last video I made the Harvia stock analysis, this video will be the one I'm presenting to you my only stock portfolio, which you can see on the screen already. So without further ado, let's see what's in it now at the end of September. Let's go the stocks through first and then talk about a little bit overall about my portfolio. So as said, this is my only stock portfolio I have, and the biggest position, as you can see, has been for a long time Alibaba Group ADR, 21%. I've been an investor in Alibaba for a long time already, years. Let's say somewhere around 3 years. Obviously, as we all know, the Alibaba stock has seen big declines throughout the recent year and over a year at least. So I can tell you that this Alibaba position I have is on the minus side for sure. But still, in regards to Alibaba, in regards to all stocks in my portfolio, do I think they are undervalued? Of course. If I wouldn't think that a stock is undervalued, it would not be in my portfolio. The main difference, what I can tell you about the components, the stocks I have in my portfolio, is that maybe I have come to a conclusion myself that I have two kinds of stocks in my portfolio, one could say. First category would be companies with sustainable moats, in my opinion. I would say those companies in my portfolio are Alibaba, Alphabet, and a relatively new position, small position in Meta Platforms. These are big moat companies in my opinion, and maybe let me tell you the other category number two, which I have identified first, is kind of the rest of the stocks I have in my portfolio, which not necessarily have big moats, but I feel they are trading very undervalued to their intrinsic value. So what is the difference between these two categories? To put it really shortly, I would say maybe the selling decision to be made is easier with the category number two. When I think the stock is not undervalued anymore, I will sell it. But with these big moat companies, it is obviously more difficult to sell because they have if nothing happens to their moats, I see that their moats are still in place. That would imply that they still have room to grow, room to enter to new businesses, profitable businesses, as they are huge companies, Alibaba, Alphabet, and Meta. So maybe the sell decision, if their stock prices start going up, would be kind of a more difficult one to make. But that's just what I have been thinking here the recent days. Those kind of stocks I have in my portfolio. So back to Alibaba. The biggest position, China stocks, hated stocks for over a year now. You can see it, I guess, with all other Chinese companies, stock prices too are going down in tandem with Alibaba. No big differences there whatsoever, which tells me that maybe the decline in stock prices is actually not related to Alibaba itself as a company, but macro environment around it, which obviously is the reason. Let me just say that I have one ETF, as you can see in my portfolio, 9% in Franklin FTSE China. That's a tech growth heavy China ETF. So Alibaba is, I guess, the second biggest component of that too. So when you put these positions together, I have 30% of my stock portfolio in China. That's a big position, to be honest. I'm not maybe comfortable myself to grow it much bigger than this, unfortunately, because as we can see, the prices are still going down. So I need to think carefully how big exposure I want to have to China. But with this exposure, I'm fine, this 30%. We all know the risks who read news about investing in China. We all know the China risks, what has been stated in the media. Let me just quickly address that. In regards to those risks, is it possible that something very bad happens with China, which obviously would affect all Chinese stocks, not to say all stocks around the world? If the worst things happen, of course that is possible. But do I believe it will happen? My answer is no. I have in some of my other videos talked about how I see that Russia is a different nation from China, and I do believe so, and I want to believe so for the sake of the whole world. Even though they are not countries with democracy, I don't paint them with the same brush. Russia is not China, and China is not Russia. They are two nations in completely different stages of development and where the nations are heading at the moment. So even though they are not democracies, be careful if you start claiming that all non-democracy countries are identical, let's say. So a little bit about the geopolitics here, which is a hot topic obviously at the moment. My hope only is that rationality will win in China, whatever happens in the future, and it's enough that we have only one stupid nation, Russia, in the world at the moment, doing stupid things. Alibaba itself, amazing business in my opinion. About Alibaba and about actually all companies in my portfolio, I have videos on my YouTube channel, not too many videos there, so go and check it out. You can find an individual analysis of all of these components in my YouTube channel, Arctic Money, you're watching now. So if you're more interested in Alibaba or any other stock, go and find a video concentrating specifically on that one from my channel. But now we move forward to my second biggest position, which is Sprott Physical Uranium Trust, a trust that holds physical uranium. With the just to quickly say to you, the uranium thesis is that that the market of uranium has been in constant chronic underproduction, and new production is not coming online. So obviously when supply goes down, and if we see demand picking up in the future, that would create huge pressure for the price of uranium to go up. And in a nutshell, that is the business case why I'm investing in uranium. If you're interested in uranium, check out my uranium episode. That was one of the favorite videos of mine, which I have, of all the videos I have made, I really like that episode. So go and check it out, and you know the reasons why I have invested such a big pie of my stock portfolio, 17%, to Sprott Physical Uranium Trust. Next up, flow traders, 16%. Also, like Alibaba, well, to say about the uranium, that position I guess is on the green side still for me. Not much, but a little bit. Flow traders, much like Alibaba, has seen constant decline in its stock price. Difficult financials industry to understand. I really needed to read about it to be comfortable in investing in flow traders, and I'm still seeing that the stock is very much undervalued, and it's kind of a play that if the markets get really volatile to one direction or another, flow traders should be able to make good profits. So if we see volatility in the market picking up in a big manner, that should be the kind of environment flow traders will make money. And my prediction is that we will see a day in the near future when the volatility picks up, and that would be a big component of flow traders' business, how they would make big profits. So that should eventually show in the stock price too. Fourth, Alphabet. This is a position I have been growing now with buys every time Alphabet stock has gone more down this year. In my opinion, Alphabet Google is the biggest moat company in the world. They have absolutely great balance sheet. I cannot think of a better company than Alphabet myself, so it is only natural that once I saw the stock price coming down from the highs and it started more and more look like a value play to me, I started increasing my position and feel very comfortable in doing so. So we are now at 11. I wouldn't mind seeing Alphabet stock going down even more so I can buy more of it. Then we have Intel with 10%. Also, if Alphabet is not gone down too much in my portfolio, a little bit on the red side, maybe only just a little bit. Intel has gone down very much also like Alibaba and flow traders. So I have been also buying Intel like I have been buying Alphabet here. So those two positions I have been growing. They are now bigger part, Intel and Alphabet, of my portfolio. Chips manufacturer Intel, maybe just shortly, the big picture, big idea why I invested in Intel is that I like the investments the company is now making, ramping up its production in, I guess, in EU and US mainly. Corona pandemic showed us how important chips supply chains are for a huge number of industries, critical industries. So it is only natural that I feel with the CHIPS Act getting passed in the United States legislation now, everything is pointing to the direction that chips manufacturing is something you should do domestically to some extent, because it's a matter of national security. And that is why I see the Intel investment in my portfolio as a pretty safe one, I would like to say, because I believe that nations have learned their lessons from the supply chain disruptions that happened during Corona, that chips manufacturing is something you don't want to rely on factories in the other side of the world. Also, as the Intel stock price keeps coming down, I see the valuation getting better all the time. So like I said, with Alphabet, like Intel, I have been buying more all the time as the stock price have been going down. Then we have the smaller positions in my portfolio. First, starting from the down up. Franklin Fuji China 9%. As I said, Alibaba, the second biggest component of that, if I'm not completely mistaken, it is still. This is tech-heavy China ETF. Kind of a little bit risk diversifying, so that I don't have only Alibaba, but a little bit also those other tech names from China. I felt at the time of buying that China tech was already undervalued, and I still think it is. Also, this position, like Alibaba, you guessed it. Yeah, I have only once bought this ETF, so it's down on the red side, but still see value in that, so it's staying in my portfolio for now, at least. Then we have Geo Group and CoreCivic, competitors with each other in the private present sector in the United States. Mainly, I guess Geo Group also has some international operations, but they both operate mainly in the United States. Together, those are 11% of my portfolio, which is a good exposure at the moment, in my opinion, what I'm comfortable having. These two are placed on the liquidation value of the companies. I believe that these two companies have been trading around their liquidation value or even under it, depending on how to evaluate them. They at least are, in my opinion, surely close to their liquidation value, which would imply that there's only upside with these two in real terms, in my opinion. So, controversial industry. I understand that the ethical side I have already talked about in my Geo Group video, so if you're more interested in these two, go and check it out. Hated industry, where more often you can find good plays, good stocks in hated industries, which other investors are ignoring, hating. Those are where you might find value, and I have a belief that CoreCivic and Geo Group could be value. Then my newest position is Carriage Services. I did a video not too long ago about this cemetery operator and funeral services arranger operator. Carriage Services, 3% now of my portfolio. I said in the video what would be my buy target for the company, and it hit that buy target. The stock price came down, so I opened a small position on it and will monitor that further once we move on from here. And finally, the last position, Meta Platforms. Difficult one to evaluate. I would like to see Meta growing bigger part of my portfolio. I do believe in Zuckerberg's vision on metaverse. I find that interesting myself, but the bigger reason why I have invested in Meta is their old businesses, which I see that are a little bit overlooked by the market. Of course, the growth is slowing, everybody knows these things, but I feel the market has somewhat overreacted to Meta's old businesses and how they are doing. And of course, when there's metaverse, which can be value or can be a total catastrophe, nobody knows, it's long way in the future. uncertainty is something Wall Street doesn't like. So when you have uncertainty around a stock, and you do have uncertainty around meta platforms, then you know the stock price might present some, or the stock price could present us some good buy opportunities when uncertainty is reigning and is around the stock. This is my portfolio, and as you can see, I have been doing investing myself for 4.5 years, around 4.5 years now, which I would say, as we all need to start from somewhere. I was much more stupid when I started investing, but let's say that during the last year and a half, I feel I have learned very much myself. And obviously, even though I started investing in 2018, pretty good time to start investing, you still had 4 years left of the bull market we had. So maybe some gains I got, I was lucky. Lucky to have some profits there somewhere, not luck, but I hope skill. But as we all know, I don't think there are too many portfolios globally now which have enjoyed this year. We have been having 2022, and obviously my portfolio is also down this year. But I'm not worried myself. These downturns, they are part of the game, obviously, and as the stock prices come down, when you trust your valuations, you might be presented by the market with great buying opportunities, and that's what I'm looking for now. Looking for how to capitalize on that. But that being said, my portfolio all-time performance is today plus 28%, and I'm happy with it. Obviously, as you can see, I have put some benchmark down there for you to see what it actually means, and I feel this is fun thing to check, like how are you doing against indices. I mean, first up, we all know the United States stock market, bull market. We have been having the amazing 10 years, also amazing 4 years before this year. Standard & Poor's 500 still plus 37, so lost to that one. NASDAQ, more tech-heavy one from the United States index, plus 53%, so I'm definitely losing to that one. But my feeling is that the difference between these two and my portfolio was bigger 1 year ago than it is now, so I have been catching up to these two indices actually. And yeah, obviously you can say the argument that if I would have invested all my money in Standard & Poor's 500 or NASDAQ, I would have made more money during this time frame which I have been investing. That is true, obviously. But then again, that's mainly United States, or I guess, yeah, that would be a very heavy investment in the United States only. You would have kind of a geography risk there. Congratulations to those people who invested only in NASDAQ or Standard & Poor's 500. These kind of returns for 4.5 years are very good, excellent. Then the question is, will it continue like this? I guess the cracks has started to grow now, and maybe Standard & Poor's 500 and NASDAQ hasn't given you the returns they used to this year, and we have all seen that already. So the old sentence is that the history is not a guarantee of the future. Definitely will not be. Myself, as you can see, there is no Standard & Poor's 500 or NASDAQ ETF in my portfolio. I don't think, as they were for the last 10 years, the best investments one could almost make, I don't think they will be the best ones for the next 10 years. That is my personal belief. Then again, if you would have more global exposure, you would own also something else than these indices from United States. You would probably have Euro stocks 50, so 50 biggest companies of Europe. They're probably during this time frame, 4.5 years, that would be quite sad, minus 2%. Europe has been in trouble. So when I start comparing my portfolio performance, 28% on the plus side to Euro stocks 50, I'm very happy obviously. Then the OMXH 25 is 25 biggest companies of Finland, the country where I'm from. As you can see, the Helsinki Stock Exchange has been doing, or the top 25 has been doing better than the Euro Stoxx 50, but still not too good of returns during the last 4.5 years. As you can see, +6 is not too good, and I have beaten that index also. Finally, I wanted to include so many people claiming that Cathie Wood is the new Warren Buffett in the investing community, and there is your Cathie Wood's ARK Innovation ETF. If you would have put all your money the day I started investing in ARK Innovation ETF, that is -6% now. My portfolio is +28%. So I will be just leaving this fact here, and you can decide yourself whether Cathie Wood is the next Warren Buffett or not. So this was my portfolio. I feel it is important for me to be transparent. I want to be transparent. I want to show everybody who is watching my YouTube channel that I have skin in the game. And the game is what you see on the screen right now. These are the stocks I own. Will I make changes in the near future? I don't know. We'll see. I don't know that yet. But these are the companies still in my portfolio. Many of them on the red side. Few of them on the green side at the moment. But they all have one common thing, and that is that I believe all of them are undervalued at the moment, in my opinion, according to my research. You need to do your own research to determine if you agree with me. I'm not giving financial advice to anyone. Everything said in this video is only my opinions, and you all know it who have been watching this channel for a longer time. And let's see what happens. Interesting times we live when the bull market seems to be gone and bear market has taken over. So, what I would like from you guys to hear is that do you have some same components in your portfolio as I have? Do you maybe agree that some of these are undervalued according to you? Maybe do you believe some of these are overvalued and I shouldn't be invested in some of these? I would be very curious to know your opinions with good facts on why do you think something is overvalued or undervalued. Always interested to hear other people's opinions. But as said, this is the stock portfolio I roll forward with now, and let me know what you think, and thank you for watching this video. I hope to see you in the next video. Bye bye.